All right, guys, what's going on? This is Carlos, CEO of GAR Capital, here for our weekly recap of our trades here with the GAR Capital Options Service. So we're going to go over a couple things, kind of preview the next week, and go from there. Welcome Discord viewers, Discord members, excuse me. Very nice day today, very nice week. We'll go over it. I also have special guest with me, Nick DiGiacomo, the teacher.
What's up, guys?
You may know him from the videos this week. And every week he does them on the Discord server as well, and also the watch list. So glad to have you on board, Nick. So a pretty good week, would you say?
My pleasure. Absolutely. I mean, I think everything pretty much worked out the way we had anticipated. Got some good feedback from the watch list. Again, guys, use the watch list, right? I mean, shout out to Teddy, all the guys that I talk to on a daily basis, Jose. All the guys.
Yeah. The whole team did well. A whole team is doing well, and I'm proud to see it. So we'll go ahead and start first with kind of reviewing the session.
Yes.
Dow went up 328 points. Nasdaq up 2%. S&P up 1.30%. We're finally on S&P 500 spot above the 100-day moving average. We still have a little bit of a gap to fill here. Excuse me. At 42.15. We get around 4,300 for the August high. So we'll see if we get this gap fill next week around 42.25. That's about 20 points away. That's pretty much the only reason why I don't want to go long again, because we're starting to get pretty close to the next level of resistance. So if we break this gap fill, maybe get around 42.50.
42.50, yep.
42.50, we'll target the 4,300 level on futures. We also did futures this week that did very, very well. So let's go ahead and start with the results. Here's the week. Microsoft, we hit the 325 calls. I reminded everybody that hit in the money today. Imagine that.
That was on the watch list.
That was on the watch list. DraftKings,
Right?
26 calls.
Beautiful.
117%.
Beautiful.
Didn't have continuance though with the rest of Mega Cap Tech. Obviously,
no, was out of favor.
Yeah, at least for the day.
For the day.
Or a couple of days. Russell 2000 got out 35%. Perfect exit because it never got close to in the money. We got as high as 176.15 today. Square, 63 calls. Again, never hit the target in terms of in the money. We got it for 36%. Hit as high as 63%. AMD, 110 calls. That was early on Tuesday.
Super banger.
Banged out 45%. If you held runner, went as high as 441%. Actually, even higher than that. So that was deep in the money. Beautiful. AMD ended up at 127. We had the 110 calls. Excellent. It was so nice. We hit it again. We did the 125 calls. Except this time yesterday, I told everyone to close at 10% and leave a runner, or just to make sure that nothing reverses. And it didn't. It soared. It got as high as around 150% today. And then Amazon, that was something I sent to the blog. It was for, I don't know why it says February 26th, but that's wrong. It's supposed to be May 26th, the entry. So let me see if I can fix that here on the screenshot. Yeah, I have May 26th. I'll get with Anthony on that. June 9th, 120 calls. It's 40%. I'm personally still holding that trade. So, Amazon, I'm personally holding it.
Oh,
everyone else,
that was all you.
Everyone got 40%. Well, yeah. The reason I sent that, let's go ahead and get out of here real quick. Here we go on the live. Here's the live market blog. Let's see here. Live market blog. I know I sent it. Here we go. So this was on the 24th, which was 2 days ago at 1:46 p.m. Keep an eye on Amazon. I was doing a little bit of a search for volume. I just wanted to see what was going out there. Did an option scan. 120 level in focus with a break of 117. Could always keep the strike close and buy some time for next week. Got some great volume with a 117, 118, and 120 call strike. I pretty much called it out there with the team. This is when the stock was at 116.39. Amazon closed the day as high as, I got to 120.11. And it got as high as 121. So I still think Amazon has more room. My target right here is the gap fill at 125.32. Maybe we break 122 and we can hit it again all the way until there. So if you're holding it, great. If you closed it, that's great too. Pretty much undefeated week. In terms of futures, we traded S&P long, Nasdaq long, And then we also had Russell that never filled, unfortunately, but a great day on NASDAQ. And this is us closing early. 208 points is nothing to sneeze at. It got as high as 307 points. NASDAQ.
That's excellent.
367 points. So well done to the team there, Nick. Anything you want to add to there?
Well, guys, I mean, all like I say on the the videos at night. I mean, watch those videos. If you guys are concerned about things or have questions, I try not to do videos if we don't have things open.
Yeah, I didn't do a video last night.
So because again, the watch list is there. Use that as a roadmap. Sometimes those alerts on the watch list, they don't trigger, but at least you have 5. We cover the S&P, the NASDAQ, typically always, and then some other ones. Remember, guys, I do this on Saturday. We're always looking. So the key is just to use the watch list as a template. Carlos comes in, he's posting charts as we go to give you guys that information. Signals. What can I say?
No more we could say.
It's been great. Wonderful.
Well, if everyone
Everything is
who doesn't know who Nick is, Nick is the VP of our options trading as well. He trades with me. Yeah. This is him right here. He sends out the watch list. This was on the 21st at 6:50 p.m. Yep. S&P, we talked about that. DraftKings, NASDAQ. We didn't play the NASDAQ futures. QQQ, but we played NASDAQ futures. So, we hit it.
But if you look at the watch list, guys, again, look at Qs, right? So Qs, you guys see this week, we hit 330, and then now we're at 350. So I'm saying utilize it. At least, even if you're not trading it, you understand.
They do. They do.
Yeah.
Microsoft, we traded that this week. IWM, Beautiful. We traded that this week. So 3 out of the 5 things that we sent out, and 2 of them were futures. That was just from one watch list. That is just from Nick posting this for everyone to see on the server. So again, premium members have access to this. Masterclass has access to this. Basic does not. So again, if you're a basic member and you did great this week, I would highly suggest that if you really want to get into deep dive into a little more technicals and a little more up-to-date trade position updates, then you definitely want to join the premium service or masterclass so you're not missing out. But Basic had a hell of a day too. They didn't close AMD yesterday because we don't give them exits, so they probably banged out the AMDs as well. So
absolutely.
Keep in mind, guys, when you're on the server, again, you can always look at our results we posted every week. Again, guys, screenshots, 100% on Amazon. Obviously, we did for 40. So when you look at the spreadsheet, it's not exactly because everyone is different on their exits. Everyone's is different on their entries. Everyone's different on their runners.
Right.
It's very difficult to quantify that for a lot of people. Let's just say.
But in the masterclass program, we go over
your personal spreadsheet.
Right. Basically, but the accountability.
Yeah, for and then you could see here AMD. I closed the runner. I closed it at 49%.
Beautiful trade.
And it is way deep in the money. So again, I closed it too early. It was for next week. I'm okay. I'm not gonna
get it right.
Yeah, dude. At the end of the day, when you're seeing green, you're not too upset.
Just get it right.
Right. Here we are for the month as we posted. Let's see the month. We are 16 out of 20. Apple was flat pre-FOMC. Disney was an earnings play, didn't work. Marathon earnings didn't work. And then Caterpillar was 20% before the market soared.
Right.
So, couple of things we could clean up. June, I wanted to be undefeated. That's my goal. My goal for this month was 80%. So, again, if we don't get undefeated, obviously that's a lofty target, Nick. That's tough, but we could do it.
Well, we always aim for that.
We always aim for perfect. But I'm going to say 85% for next week would be a good target for win-loss. Kind of gives us a little bit of room. But the goal is to do what we're doing this week, pretty much for the month of June. And that's where we are. So 80% for the month of May. If we want to take a look at the quarter, we're at 81%, 30 out of 37. Server members, remember, all entries, all exits, all screenshots, all explanations are all on the server. So if you want to go ahead and back test your stuff, feel free to take a look at everything I've posted and take your time, fill out your own form. And go from there. So you can always set up your spreadsheet as well.
Don't forget Q1 too.
Oh yeah. So I'm not done. Right. So Q2 is there, and Q1 we were at Q1 we were at 77.4, so Q2 definitely showing some improvement. That's a great sign. And then year to date, we are at 79%, 77 out of 98 trades, again, year to date. If you just did $500 risk, obviously, again, this is something that I have to just base it on a consistent basis in terms of my entry and the exit that is posted. It's always the signal, not exactly where I close, because there's deviations. We are up now, not including runners, about 60% for the year. Right. So we could probably get to double that or get to 100% probably by August. If trends hold, we should be there by August. So that's kind of our target. Again, as traders, you always want to have those goals. Make sure they're viable, that you can actually do it. I want to make $1 million and have $1,000 account. It's not a plan. No. That's not going to work. You start with base hits, consistency. Look at the year to date, guys. We get clusters of gains, and this is not just one straight shot up bull market. This is a lot of chop. There's calls and puts.
Now,
go ahead. Sorry,
I just want to say, and interject. The main thing, guys, is consistency over time. Okay, so if you guys notice, look, there's a lot of groups out there. There's a lot of services. The main thing is understanding that consistency with your entries. Okay, so you can make a ton of money, but you may not be right consistently all the time. So again, my point is that, and we talk about this in the masterclass program, it's about the compound effect, right? So you got to have a high hit rate. You have to be, at least in regards to how we see it, we keep the risk in check while at least you're learning this. I mean, keep your risk in check always. You don't need to swing for the fences because the math here will take you to where you need to be.
Yeah, $500 risk based on this. It's all written down and it's all added, and there it is. I mean, even the 10%er, even though I didn't get 10%, I got 50, but the signal is 10%. Right. So sticking with that, that's where we are. Go ahead.
You could have, let's say, 10 trades, and maybe on 7 of them you lose, but then you go all in on one of them.
You're blown.
And well, let's see. But see, I'm saying you could go all in and say I've made up for all of this and that. That doesn't work. That is not sustainable. Okay,
that's the Nightingale effect.
This is not. That is not sustainable. So again, what we try to do and convey is consistency over time. That's one of the biggest things that we strive to.
So if anyone knows, if I've ever been in a casino, and again, I know a lot of people don't like equating trading to gambling, and I understand, but that's the only mathematical thing that's congruent to trading. So in roulette, there's something called a Nightingale trade or Nightingale strategy, where you bet on one color, whether it's black or red, right? Let's say, and if you're right, you double your money. So you start with $100 on black, and you hit it, fine, you made $100. You bet that $100 again on the same color or a different color. Yeah. But if you lose, what they do, a lot of sports bettors I've seen in Vegas do this too. So they make a bet and they lose it. They double up the next bet. Right. So if they win, they're break even. But if they lose, now they're down 2. Yes. So the third one, what they do, they triple down to make up for the last one, and you're just back to square one. And with that's great for the guys giving the information, but it's not helping the client. It's not helping the member who's getting burnt by who's just paying just to play, not even to win.
Right.
I mean, listen, this is not a hobby. This is serious. This is a business. You treat it like a business, you get paid like one. You treat it like a hobby, you get paid like a hobby. There's not a lot of money in collecting, baseball cards. Well, maybe there is. There is a lot of money, but you know what I mean. Hobbies. Yeah, yes. Sorry, that is that's pretty lucrative. Sorry, yeah.
You go fishing.
One of our members is going to have a Mickey Mantle rookie card signed and send it to me as a picture. And he said, "You're an idiot." I mean, that's fine. I used to collect basketball cards.
The point that Carlos is trying to make is, and what I'm trying to make, honestly, is just to be consistent with the risk. It may not be sexy. Okay, it may not be sexy, but I'm telling you. I mean, again, you go if you're a math guy, it works. Okay, that's it. You don't need those big home runs. Again, you're trying to learn a craft, and again, this is why we do the masterclass program. And remember, guys, I probably won't be teaching forever. So I mean, I know that we're offering this deal. So if you guys want in, you got to let us know.
Well, to be fair, Nick was one of my students. Mm-hmm. I taught Nick. Was it 2018?
No, it was
2017. Yep. 2017, GAR Capital was about 3 years old. Nick was a student in Miami. I met with him. Masterclass used to be in person. If you lived in Miami at that time, I met many members. Shout out to Marcos for crushing on NVIDIA. So I taught Nick, who has then taught others. And again, it's one of those, once you learn the skills, guys, and the skills is not gambling.
It
The
takes
skills
time, guys.
is your charts, your macro, your understanding of what headlines mean. And again, once you look at one chart, you've seen them all and you get used to it. All of this right now, I know we're very excited. It's a short squeeze. Everyone was thinking the world was over. And we said this since October. And this is not surprising. And you are going to go higher. So we're now settled above the SPX 100-week moving average. For the time being, guys, it is a buy the dip market. And that's for now. For the time being. Now, again, we'll see what happens. Maybe,
the debt ceiling doesn't.
The debt ceiling, I mean, stuff that is out of our control. Right. Let's say if everything stays consistent, it's a buy the dip market. Everyone who was short got burned, and that happens. Just like everyone who was long got burned in 2022.
Rinse, repeat.
Rinse, repeat. So again, it's cycles. And the key is to take advantage of these cycles. And that's what we've done this year. You can see, notice with our signals, it's clusters. You'll get 5 in a row,
right.
7, 8, 9 in a row, 3 in a row, 10 in a row,
right.
and then another 5 in a row. And that's what gives you that juice. You're taking advantage. And again, guys, it's not only tech. IWM, airlines, banks, Disney, which is a entertainment company, banks as well, Boeing. So it's not just GAR Capital rode the short tech squeeze. No, it was more than that.
Puts and calls. It doesn't. Listen, the main thing, guys, I can't stress it enough. Just please focus on your risk.
Yes, that's number one.
You don't need to. If you want to stay in the game, just keep your risk low and keep grinding it out. You will see results. You know, and again, a lot of this is behavioral, right? A lot of psychological, behavioral. You have to go through the seasons. You have to see you have to develop some sort of pattern recognition. All this stuff. It takes time.
It takes time.
It takes time. It takes a few years, maybe 3. I would say between 3-4 years. Something like that. It depends on your aptitude. Depends on how much time you're able to put in.
Right. Just like anything else.
Like with anything else. So I mean, don't go crazy out there. You see all these big gains and things like that. Block that out. Focus on you.
That comes with habits. That comes with the right habits. That comes with right risk. Understanding what you're getting into. With good explanations. Being around people who have the heart of a teacher. Who just don't want to just, see you as a dollar sign. That they see you as someone who's a contemporary that sees.
Like me.
Yeah, you look at the things that we look at. And we're all here for the same reason, man. We're here to make as much money as we can and get the hell out. That's it. So we're going to keep doing that. And we're going to keep that momentum going. While being smart and not going all in, sticking to the plan. Slow and steady wins the race. It'll be consistent over time. That's what gets you paid at the end of the year. That's what gets you reoccurring revenue every month, is that you could do this whenever you can. Treat the market like an ATM, not a slot machine. When I get money out of the ATM, I don't think about the next time I'm going back. Right. I just got my money and I left. Now, when you're in a slot machine, what do you do when you leave the machine? Oh, I bet it's going to pay out now, right?
Focus on consistency.
ATM machine.
That's it.
All right, let's go ahead and go over the week and not waste everyone's time repeating yourselves.
Right.
42.14 gap fill on SPX. That's what I want everyone to focus on. We should break that next week. If we do, we're looking at 42.82, 4,300 SPX as our target. We can trade futures to that. We can trade SPY to that. Let's see NASDAQ. We are now at the 38.2 Fibonacci level, which was my target for futures. And if you guys want to see it, here you go. Here's the futures trade that we sent. And it was a limit long from Nick, not this Nick, the other Nick in Brooklyn. 14,000. If you held, and we didn't, 367 points on the NASDAQ. If you held S&P long 41.62, you got as high as 42.19. Not bad at all. That's about, 50 points? 47 points? 57 points, if my math serves me. And that's excellent. That is excellent. I mean, if you held the whole way, which I didn't. So, whatever. But some did. If they did, great.
You don't need to catch the whole thing.
No, listen, man. You don't have to catch them all. You'll never get it perfectly at the top. Doesn't work that way.
Just get it right.
In terms of next target on NASDAQ, if we get continuance and we break that gap on S&P, it's going to be this here at 14,865. I can't believe that we're saying that. Guys, that was just April of 2022. We are now at a point where all-time highs is not out of the question. I'm not saying it's going to happen. I don't think it will. But man, can we be close? Oh yeah. Everybody who thought inflation would ruin the world, everyone who thought, wars and politics and such, markets are seeing forward, and they're all about this AI. And here is your leaders of the clubhouse in terms of the S&P year to date. Are we noticing a pattern? The names that got hammered last year are bouncing, and the names that are winning last year are getting hit. Energy we talked about. Guys, we've hit peak oil. That's done with. I mean, this is why the Saudis need a golf tour. They need F1. They need a bunch of stuff because more people are going to get into electric vehicles. Tesla is now partnering. Now Ford can use Tesla charging ports
Good.
or stations to charge their electric vehicles. GM will probably be next. So that's great. Oil companies pay a dividend, but growth, unless we see a war overseas in regards for oil, maybe, but I doubt it. UNH, one of my favorite companies to own, now nearly in correction territory, or if not in correction territory, but it's territory. It's down 9% year to date. This name was a home run. Pfizer, I invested in Pfizer during the COVID epidemic, made some money. Now it's pulling back, down 26% from the highs. Guys, these are just rotations. Look at the banks taking a hit. Bank of America down 14%, but this is what's carrying the market. All
Next week, we'll see.
All of this right here, guys, is what's grinding the market higher. Technology, communication services, and cyclical, that is Tesla and Amazon. This is all the names that got hammered last year and everyone thought was a bubble. Guess what? It bounces. Why? Because they actually make money. This is not 1999. Everyone talks about dot-com bubbles. Apple has more cash than they know what to do with. Microsoft, Google, the same. And Metaverse is almost criminally profitable in terms of what the money they make. It's like drug dealer profits margins that Facebook gets. So, as an investor, am I excited for my portfolio? I mean, I think we all are. But I think focusing on options to the upside is better for us to make money now than just chasing buying stocks. Let's go ahead and take a look at stocks when we get a pullback. Right. Some kind of intermediary pullback. 4, maybe we get below 4,000 S&P. Yes. That's not the lows. No one has to go crazy. That's not the lows. But again, 39.84. Hey, why not? Now you're talking about getting a nice deal, nice 10% correction, which is, by statistically speaking, happens pretty much every year.
That's gonna happen.
So you will get some kind of correction. You're not going straight to 48.08. Don't get that excited. But the lows, this is why we talk moving averages, guys. Look at the 100-week moving average. We broke above. What was the support? The 200 weekly moving average, which was the bottom from October.
That's it.
Could this be the top, Nick? Possibly.
I doubt anything is possible.
I don't think that. I think we're going to
anything is possible. We know this, but the risk is to the upside.
It's still a trader's market until further notice, until we get a pullback and you can actually buy stocks that are not soaring and changing in price the next second. Let's use options and futures to get us paid while our portfolio is making money. I think that's the right strategy. In terms of next week, what to expect, we have non-farm payroll on Friday. Earnings are pretty much over with, guys. So we have JOLTS job opening. We know that unemployment claims are down under expectations from this past week. ISM manufacturing, PMI, we have private payroll, and then we have the NFP non-farm payroll report. 189,000 is the expectation with a 3.5% unemployment rate. Let's see what happens in regards to that. So that's where we are for the week. Excellent week, guys. Monday, the market is closed. Thank you, Nick, for joining me. Any parting words for the guys? The watch list is coming?
Keep going.
Watch list is coming, right?
Watch list will be up Monday, guys. Monday, because, again, it's Memorial Day.
Enjoy your weekend.
Please.
Enjoy your weekend. Enjoy your profits.
Get outside. Go do something with the wife or, whatever.
Spouse.
Yes.
Or whatever. Friends.
Spouse, friends.
Kids, dog.
Yeah. Just get out there and enjoy life.
That's it. Be grateful always. Tomorrow's never promised. And, one thing I recommend for those who do trade, take screenshots of your triumphs because they're really going to help you grind it out on their tough times because that's still always going to happen.
Yes.
You're always going to have tough days, but it's good to remember the good stuff that you were missing. We'll leave it there, guys. Have a great rest of your weekend. Thanks for being a part of our service. And if you haven't already, make sure to join GAR.capital. That's www.gar.capital. There is no .com. Link in our description. Have a great rest of your day and enjoy your weekend. And thank you to all the fallen soldiers of the armed forces who have sacrificed for our freedoms throughout the years. Memorial Day is for you. Remember the date, what it means in regards to our armed services here in the United States. It doesn't mean just barbecue. It means give a moment, at least to reflect on those who have given the ultimate price for us. I have a lot of friends who are military men and women, and they deserve all our gratitude. We get to sit in front of a computer and make money because they fight for us on the front lines.
Have a great weekend, guys. God bless you all.
Cheers, guys.